Good afternoon, everyone. This is Henry. As we get into tonight's video review, I wanted to bring you a chart and a trade, both really just potential right now. I do believe that it's a good idea, but I also know that tomorrow is historically the most bullish day of the week. Now, that may not come through at all. But what I wanted to do is give this to you ahead of time and see if it plays out into Thursday or Friday, and if we get a good spot to try and take a shot at this time spread. So if we begin with a quick review of the chart and just looking at some of its basic Fibonacci proportions, we've got a fascinating example of where a previous swing high down into a swing low, and then using those Fibonacci proportions really gave us a clean 1272 extension that was tagged pretty much perfectly after the company announced quarterly results. That provided a pivotal area of selling, and that resistance has remained true for weeks now. So I'm looking at this thinking that the previous swing high of 157, more immediately this gap around 153.35, I am considering all of this as resistance. Now, of course, if Apple just explodes up through this and just keeps going, then this idea is not going to work. But if you too look at this and think, okay, that's pretty important area of resistance. And then for the witching expiration, remember next Friday is going to be the first quarterly expiration of 2023, and it's something that you have to watch for the potential, again, no guarantees, but the potential of seeing large psychological values tested. It's just one of those things that, everybody that's been buying the 150 call, everybody that's been buying the 150 put, market makers that have been selling them to them would sure love to see it right here at that strike, because at that strike on expiration, the put and the call is worthless. And I just think it's an idea that, again, maybe Thursday and Friday you meander up in here, but then next week thinking we get back to and tag 150. So if you like that chart pattern, if you like that idea, one way you can look to try to capitalize on that is through a time spread, or in this case, we're going to talk about the calendar. Now, I really don't think that we can consider the calendar too much for the immediate expiration, because this Friday's put is only trading at 50 cents. So that's not really enough credit to offset the debit that you'll pay for the other contract. So I'm looking at going out here into, again, that witching expiration, looking at the 150, and then just buying that calendar. So if we buy the 150 put that has the 24th of March expiration, and then you sell that contract that is going to be, again, for next Friday, this gives you a little bit of bearish delta relatively cheaply, and is a position that I think does well if it eases back. So I'm going to be fishing for this tomorrow, see if I can get it maybe a little bit cheaper as Apple advances, provided resistance holds. That could be a good trade into next week. So I hope that provides some helpful ideas, gets the gears turning around that witching expiration, and we'll see how that unfolds into next week. You guys have good trading, and I'll talk to you then. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.